Welcome to our February webinar, focusing on how digital financial services and digital money are changing the world of financial inclusion and opening it up to new participants. SANAD are helping to enable businesses to continue to survive and thrive during COVID, and we're lucky to be joined today by a member of the team, Katerina, who's going to tell us a little bit more about SANAD, and I'll pass over to her now.
Thank you, Ian. Good morning or good afternoon, everyone, depending on where you are. My name is Katerina Morton, and I'm the mandate officer for the SANAD Technical Assistance Facility. SANAD Fund for Micro, Small and Medium Enterprises is an impact investment fund and one of the funds that is advised by Finance in Motion. The fund was initiated back in 2011, operates in the Middle East, North Africa, and select countries in Sub-Saharan Africa. The fund promotes the development of entrepreneurship and MSME finance, as you've seen from the video, and provides much needed access to financial resources to micro, small, and medium enterprises in the region. We do that through financial intermediaries, so banks, microfinance institutions, and thus supporting the MSME growth and job creation in the region. We have a number of instruments. The fund provides debt and equity financing and also offers technical assistance support, which is tailored capacity building to our investees. And also we do the overall support to the entrepreneurial ecosystem to promote the development of MSMEs and entrepreneurs in the region. Recognizing the importance of Fintech in promoting financial inclusion, we developed the webinar series. So this is another interesting webinar today to promote the topic, and we'll be discussing the importance of digital and financial services in helping unbanked populations access finance. We are very much excited about the topic and look forward to a fruitful discussion with our experts. Thank you.
Our pleasure, and as Katerina rightly says, we're joined by two absolute experts today. I shall come to them in just a moment. But a few tiny pieces of housekeeping first and foremost. So, as Katerina mentioned, we have a number of these webinars. This is the fifth in the series. You can view all of them by going to www.sanad.lu/entrepreneurship-academy. You can also tweet about the webinar using the hashtag SANADDoesFintech. And you can ask your own questions to our panelists. If you go to the bottom of the screen, you'll see there's a Q&A function. Please do send us questions. I can see there's a good number of you logged on already. We're excited to hear from you. We will be putting those questions to the panelists at the end of the panel. So please do bear with us. If you send us a question in early and you don't hear it asked straight away, that's why. So we'll move to introducing the panelists, and I'm going to let them introduce themselves. We're going to go first to Justin Hadgkiss of Zand. Justin, tell us a little bit about yourself.
Thanks, Ian. So I work for Zand in the UAE, which is a new bank just in the process of getting through the final regulatory steps and legal establishment. So we're a digital first bank, retail and corporate. I look after cards and retail payments. So I previously worked at Wave Money, where I actually worked for Brad, who's the other panelist, and Wing, which is in Myanmar and Cambodia. And I've also previously done some consulting advisory work with SANAD through Finance in Motion. Thanks.
Thank you. And we'll move now to Brad and ask Brad to introduce himself. Brad, if you can just tell us a little bit about yourself before we get started. Sure.
So Brad Jones, I'm the CEO of Wave Money in Myanmar, which is the leading fintech in the country. As Justin mentioned, I was also the founder of Wing in Cambodia, but I have had some Middle East experience. I was the head of mobile for Visa in the Middle East, North Africa and Pakistan for a couple of years. So I've had the pleasure of actually seeing what's happening in the North African, Middle East fintech market as well.
Fantastic. And as Brad touches on there, we are, of course, focused on Middle East, North Africa and Sub-Saharan Africa, which is where SANAD operates. But we will be looking at what some of the best practice looks like from around the world, given financial inclusion is obviously a topic that touches many regions of the world. We're going to start with the panel, and I've got a question for you, Brad, first, if I may, which is financial inclusion is a huge topic. We hear a lot about it. Why are so many people so keen to talk about financial inclusion?
I think the key thing to me, I mean, having worked in financial inclusion now for the best part of 15 years, you become very cognizant of the impact that people being financially excluded has on them. So, and really that the ability to be financially included should really be a human right in the same way that that other human rights are in place. I mean, if you're not financially included, you know, the ability for you to move money easily around a country is difficult. The ability for you to access lending at reasonable interest rates is very difficult. The ability to safely store your money is very difficult. You know, having worked in developing markets, I think you see situations where people will invest their savings into a farm animal, a cow, a pig, or whatever. And there's obviously great risk in doing that. That if the animal is sick and dies, then their savings go with it. Similarly, you know, people, I know from the Myanmar market, for example, that the money lending industry is completely usurious. You know, we see situations where market vendors will borrow money on a daily basis to buy their goods, and they might pay anywhere between 15 to 20% interest per day on those goods. So, you know, the ability to really access affordable finance is really a very difficult thing if you're financially excluded. So, you know, there's a saying, obviously, that it's very expensive to be poor, and I think this is very much the case in financial inclusion. That if you are financially excluded, you'll pay more for sending money, you'll pay more to store money, and you'll pay more to borrow money.
Yeah, absolutely. And I guess that leads me to my next question, which is, you know, financial inclusion, as we've said, is a broad topic, and there are a lot of actors in that ecosystem. Some for profit, some completely not for profit, some who are, you know, generating revenue but are driven by a social good, shall we say. What do you see as the kind of best practice for that ecosystem? Does it require elements from all of those three areas, or is it best administered purely by private industry that can you know, get the efficiencies that we often hear about of the private sector? Is it best administered purely by NGOs so that nobody's making profit? What's your view of the kind of mix that's necessary?
I think every one in that ecosystem has a role to play. So I think from a regulatory perspective, it's important that regulators are creating an enabling environment for financial inclusion, that they recognise that financial inclusion is important for their country, and that economic development is really critical. And certainly people will be pulled out of poverty if they're able to actually be financially included. I think you know, the role of the NGO sector. So we've seen obviously significant investment from the likes of IFC, from CGAP, from Gates Foundation into financial inclusion, because they recognise the importance of it, and they see that donor funding is a way of actually accelerating financial inclusion in markets where perhaps it may be more difficult to do so. And then it comes down to the individual businesses as well. And one of the things that I would say, and having launched mobile money way back, you know, starting working on the project in 2006, 2007, the way to monetize mobile money was often seen as a difficult prospect. And certainly very few of the mobile money operations around the world have scaled to any significant size and become profitable. But there is an ability to turn these businesses into profitable enterprises. The business I run now, for example, became profitable within 2 years of operation. So, and we've retained very healthy EBITDAs ever since, whilst at the same time providing a very important service to the poor. So I think developing, it's a combination of governments, it's a combination of the donor community, and a combination of the private sector to develop financial or to develop business models that can basically be sustainable and be pro-poor at the same time.
Excellent. And Justin, do you think that's the case kind of uniformly across the various areas of the globe where this is important, or does each area very much have their own unique set of challenges and opportunities that change the necessary mix to kind of get these things right?
Well, I wish it was. I wish most sort of bank CEOs or FS CEOs had the empathy that Brad clearly has for some of the more left out people in our community. I can't say too much for the bank I'm working for, but we are looking at how we adapt our platform to suit different markets and different market segments, whether that's through making sure we've got simplified products. We've partnered with Dubai Cares around financial literacy education. There's more to come on that. I've been very fortunate to work for banks that put the customer first, and I think any business, if you're not starting with the customer and you're focused purely on profit, then you're not going to win in the end. So, and clearly that's worked for Wave Money. I do think that you can't treat every segment the same. There's no one size fits all. But even in the UAE, we have a significant underbanked population. So the estimates vary, but there's at least 1 million, maybe 2 million lowly banked or underbanked, and there are different solutions in the market, sort of simpler payroll-based products. But you have to be careful. I mean, to be profitable, sustainable in this market segment, I think some institutions get tempted by obviously using debt or lending, and if that debt or that lending is overdone, it can be a negative impact on individuals at the lower end of the pyramid, and they don't have such a safety net. So I really think obviously fintech technology is really helping enable this. There's very few places I think left in the world where you can't at least get a 2G tower connection, and for the majority of the planet. And so and I think that goes back to your first question, why is this sort of a hot topic? Clearly there's lots of people excited by fintech. It has solved a lot of problems. It's helped people do jobs differently, more cheaply. So it'd be exciting to see how it continues.
Yeah, you touched there on the second part of this topic, which is we're not just talking about financial inclusion. Obviously, we're talking about how fintech and digital financial services have changed the game. Are there particular elements of fintech, or particular elements of digital, or perhaps it might be more accurate to say mobile financial services that have a real impact on that underbanked or unbanked population? Is it about payments? Is it about remittance? Obviously gets talked about a lot in this part of the world. What do you see as the kind of core components that are really changing the game?
I think if your first interaction with a big sort of MNC sized company is probably when you buy a SIM card. In terms of an ongoing relationship, I'm not talking about a sachet of shampoo. That's one thing. If your sort of phone has an issue, you can recall someone or send them an SMS again. Asking people as their second interaction to actually hand over their money is, I think, the biggest challenge. And so trust is clearly an issue. I think you can't ignore the human element in anything you construct here, whether it's physical distribution models. Typically, obviously, mobile money has been agent-led, the successful ones, and then evolved in parallel to include more directed payment, using smartphone applications, which is the norm today. Obviously, digitizing one leg of a transaction, making something cheaper for me, making something safer for me, solving a problem I have. I think they're the two biggest drivers for me, is this physical sort of distribution, not forgetting that human element of trust, and then obviously digitizing what you can over time.
For sure. And Brad, I'm going to come to you on that issue of trust. How did you solve that problem in Myanmar with Wave? What's the kind of secret sauce, if there is one?
I don't think there's a secret sauce as such. I think the channels that you provide are a very key part of it. So really, with when you're dealing with the mass market, as we are, we're dealing with millions of customers doing millions upon millions of transactions every month, and that they don't have a bank branch to go into. So they can't go and solve a problem at a bank branch. The only way they can solve a problem is to ring a call center. So we have about 350 call center operators that operate around the clock. We receive 400,000 inbound calls every month. That service is critical, really, to be able to actually build trust with the customer. I think in a world where people are moving away from call centers and moving much more to digital self-management, we see the call center really as a critical part of our operation, because it does actually help build that trust. I think being very conscious and investing in fraud management and risk management. I mean, we have a 3 lines of defense model, like banks will. We have a business assurance function in the first line in the business, which is very focused on fraud prevention and dealing with disputes and so on. We have a risk function, and then at that second level, which is actually making sure that the first level is doing the right thing, and the third level of audit, obviously. So building out those sophisticated systems and structures to make sure that you can nip fraud in the bud. And fraud will always be an issue, and as soon as you close one fraud loophole, fraudsters will climb into another one. So it's really trying to be ahead of the fraudsters as well. So they're the key things to me. It's making sure you're providing channels to customers to make sure that they can always reach you, that you can deal with their issues, and then making sure that you're running the business in a very ethical and a very compliant way.
Excellent. I have a follow-up question on that, but I'm just going to launch a poll for the attendees. So you should see that coming up on the screen, guys. Have a look at the questions, give us your thoughts. That'll form some of the conversation that we have in the second part of the panel. But your point on fraud there is an interesting one, Brad, because of course, technology offers some solutions in that space as well. So how much are your internal systems evolving as new technologies come to maturity? How much of that are you building, or are you partnering with other fintechs to provide those services?
I think, this is a big area for us, and particularly in a market where there are sanctions in place, and increasingly more sanctions. I think the ability to be able to monitor transactions and analyze and report on sanctions issues is very critical. I would say at the moment that this is an area that for us is a lot more manual than I'd like it to be, and we're actually looking at a number of different providers, regtech providers, I suppose you'd call them, to actually automate the transaction monitoring and reporting process. So this year we'll actually start to do a lot more work on the automation of it. We maintain 100% compliance, and but we do it through a team of people that are doing a lot of manual sort of data manipulation and data analysis. So I think that's just really part of any organization's growth, is a lot of banks are still doing it that way as well. But we'll start to move into a lot more automation of that this year, and particularly given the data set that we're looking at, because it's huge now with the number of transactions and so on that we're doing.
Yeah, understood. And Justin, you've worked in a number of different regions. What extent do you see kind of cultural differences making to the way that some of those processes work? You know, are there particular areas where, you know, call center is a preference, or other areas where people say, you know, actually it's that face-to-face relationship with an agent, or it's about, as Brad touched on, a fully digital experience? Have you seen any difference, or is it much of a muchness?
Completely different. I mean, when I sort of moved to Myanmar, they were just rolling out internet, you know, and people were just discovering that Facebook was the most common, you know, usage of the internet. But, you know, we conducted focus groups, human-centered design, and asking people, well, do you have the internet? They say no. I said, well, do you use Facebook? Yes, of course. You know, and so obviously, you know, there's language, there's financial literacy, there's smartphone penetration, the cost of data, usability concerns. Even in the UAE, where I'm sitting, I guess it's Fintech, one of the very large food delivery organizations actually built two separate companies. They split their company in two, and they built one application for the large Indian and Pakistani market, and they built another application for the more, I guess, Western market. So, yeah, I mean, it's Cambodia. If I was to roll out financial services at the market we're talking about, it wouldn't be using ATMs and having a shiny Visa card. But obviously in the UAE, we don't have agents. There's many ATMs, as you know, and so the products would look very different. So I think it's the products you roll out, what people are familiar with, and obviously all those usability concerns.
Sure. Justin, are there any new technologies you see coming in that you think, okay, you know, mobile adoption created one leap for financial inclusion, obviously with the advent of mobile money? Is there something, whether that's, you know, artificial intelligence or something else that you see coming in that you think is going to cause that next, you know, cycle of growth?
I mean, I think we should stop calling mobile money and just call it digital banking, because that's really what it is today. I mean, some of the mobile money applications are more sophisticated than your typical, you know, big bank in Australia where I'm from. So I think QR codes are increasingly becoming a source of extremely cheap way of conducting commerce, not only face to face, but online as well, that you can scan off your screen. Social media linking to request payments, push payments, pull payments. You know, I think I jotted a couple of notes here, but you know, I don't know if open banking is going to change the world in a lot of emerging markets, but as it has in developed markets. And the other thing is, you know, low cost, almost instant international remittance is becoming a far more common reality. So, you know, out of the Middle East, there's a huge diaspora living in certain markets, particularly UAE, being the fourth largest remittance market in the world, which supports millions of people living overseas. One of my jobs is to make sure I can do international payments as quickly and cheaply as possible. Yeah.
Brad, anything to add to that? Are there particular technologies you see coming through that you know, Wave Money are laser focused on and kind of trying to implement? We talked about RegTech, of course, already.
Yeah, I think the interesting thing in emerging markets, I mean, payments is a fascinating subject, and what I find most fascinating about working in emerging markets, and this is relevant whether it's you know, whether we're talking about Sudan or whether we're talking about Myanmar or Pakistan, really, but the payment rails are very different to what they are in a developed market. So in a developed market, you know, you have your RTGS systems, you have your clearinghouses, you have your sort of sophisticated retail payment structures. Whereas what we're seeing in developing markets is that those rails are often non-existent. And, you know, even at the banking level. So, you know, when I first came to Myanmar, for example, there was no real-time gross settlement system, there was no automated clearinghouse, and there was certainly, there was a very limited retail payments ecosystem. So what we've seen with Wave, and we're seeing the same thing happening in the Middle East and Africa, is that mobile money system or mobile money fintech systems are becoming the payments rails for these countries. And then a lot of additional services start to be built off the payments rails. So for example, integrations to banks, mobile wallet to bank integrations are really one of the largest growth areas at the moment that I'm seeing, across all markets, and that's really starting to connect the unbanked with the banked, and that's particularly relevant for merchants and so on who may be unbanked, but then are getting their first bank accounts, and then through their trading activity, start to become potential customers for the banks and so on. So I think for me, the interesting thing that I'm seeing is that as the fintech sector starts to develop, and particularly in payments, you're starting to see all of these missing pieces that exist in a lot of these countries around the payments hierarchy starting to be filled. And once again in Myanmar, the RTG, if I fast forward 6 years to now, the RTGS system is in place. There is an automated clearinghouse in place. There's a more sophisticated retail payments network, and now you've got mobile money operators who will look to come together through some sort of interoperability, and that interoperability will basically be the last sort of connecting piece to really have a functioning payment system. So that to me is the very interesting thing about the growth of financial inclusion, is really how the mobile money platforms are effectively filling in the last mile of the payments infrastructure of the country.
Yeah, okay. And with these, as you say, these new technologies and moving populations, really, not just one or two people, but big groups, big communities, from that unbanked position to being more included. How important is community participation? How are you engaging with not just an individual customer, but trying to get that whole community together to engage with the organisation, with the business?
I think the great thing about financial inclusion is that it is very community driven, because you can't roll out these networks when you've got the absence of bank branches and ATMs and so on. You need to use agents, and agents are effectively the mum and pop shops of every community, and if every mobile money operation has to have an effective agent network, and the best agent network or the best agent in that network is someone who is a part of the community that they operate in, is trusted by the community they're in. We talked about trust before. I didn't talk about agents, but agents are a critical part of the trust component. Because the same place where I'm going to do my financial services, be it a deposit, a withdrawal, or receiving a payment, it's the same place that I go to buy my groceries. It's the same place that I go to buy mobile phone top up and pay bills and all these type of things. So I think it's one of the things I love most about being in mobile money. I've been through agent networks throughout Africa, throughout Asia, and the people that you most deal with are the pillars of the community. They are the people really at the last mile, in the villages, in the small towns, that are providing these retail services.
Yeah, understood. We've talked a lot about unbanked and underbanked communities, obviously in developing countries. Should we be talking about underbanked populations in developed countries as well? And, I'm thinking here primarily of Europe, where I'm from, Australia, where you two gents originate. We know there are communities in those countries that have less comprehensive access, shall we say, to financial services than others. Is that a market that we should be addressing, or is that small change when we look at some of the the bigger developing countries? Justin, perhaps you could jump in on that.
Yeah. My perspective is I think there's a huge amount to learn in developed markets from developing markets. I mean, me personally, I learned a huge amount building a bank in the UAE, having done it, previously in emerging markets. So I think those technologies, the way of working, doing things in lower cost ways, definitely teaches you and is able to address lower segments of the community, like I spoke about here. So it is tough though. I mean, if you go and build a bunch of bank branches and an ATM network, your cost to serve on a per customer basis may be extremely high, and therefore, you know, at the lower end of a market, you are volunteering to lose money. The way I'm trying to think about it is on a delta. If I've already built a bank targeting an existing customer segment, what is the additive cost? Or can I set up a separate entity which is built more appropriately, whether I use say a prepaid card instead of a credit card and a debit card, whether I try and encourage people to set up a merchant cash out network rather than using ATMs, and actually building things that typically the side effect of that is they're actually more suitable products for the people that you're trying to offer them to. The typical, I guess, in where we are is a salaried employee, maybe working in construction, hospitality, could be a maid. There's hundreds of thousands of such people. There are products slowly addressing this market, offering low-cost remittance, offering a simple card to be able to withdraw cash from an ATM. I think it's really about understanding what are your cost drivers and being able to do this sustainably. I think MFIs, there's a lot of people in the audience would understand this very well. As you're going through digital transformations, investing capital in offering digital channels, you know, it's a very balancing act kind of way you can have to go out in the market. Clearly also, the more digital your offerings become, as Brad spoke about fraud, therefore you need a lot of education, you need a lot of monitoring. You cannot avoid manual work in this. You also need to have far more investment in technology infrastructure, networking, disaster recovery, software licensing. You know, this is unavoidable cost. So yeah, absolutely, we should be discussing this in developed countries. I think it starts with education, but also making sure you're building the right solutions so it makes sense for both sides.
Yeah, and obviously we hear a lot about diversity and inclusion currently, you know, in a vast range of settings. You've worked in banks and financial services institutions across the world. Do you think it's important that members of the communities that you are trying to serve, that underbanked or unbanked population, are, you know, a part of the business or a part of the company, or is it enough to simply do, as you were talking about there, that kind of understanding voice of the customer research? Just,
I mean, one approach to building a bank for the UAE for different segment of the market would be to build it elsewhere, change the currency and deploy it here. And so that, you know, some of the platforms I'm seeing offered in the market are doing just that. They have been built and operated successfully in India, Pakistan, all over Africa. And so, yeah, for sure, you know, it'd be foolhardy not to involve the people that you're building something with in the construction of it, at the least in terms of focus groups, human-centered design, UI, UX consideration. But, you know, I think Brad can speak very well to how he's managed to bring Myanmar people to very senior roles. Anyway, I'll let Brad talk about that.
Yeah, sure. Like, I might just make a quick comment too about your question, Ian, on the developed markets as well. And I mean, I've done a lot of work in the Philippines in the past as well. And one of the statistics I remember being told when I was working for an MFI that was actually looking to digitize a lot of their transaction flows. And one of the shocking stories I heard was that 90% of Filipino women who go overseas to work as domestic helpers return to their countries after sometimes decades away, poorer than when they left. So clearly something is failing when we have you know, Filipinas going to places like the UAE, going to places like Singapore, and then coming back to their home countries poorer than when they left. You know, there needs to be financial services that enable them to save, enable them to, you know, to basically set up for their future and create wealth opportunities and so on. So I think that, and you know, even in Justin, in my home country, I think it's scandalous actually how some of the Indigenous communities are very much financially excluded as well. You know, so and we're actually seeing banks retreat from a lot of locations. Bank branches are disappearing from these communities. So yeah, so I think there is a lot that can be done on that. In terms of the local development, I mean, I think you know, we have I've been very happy actually with how we've been able to develop local talent, and I've been able to develop local talent in Cambodia, been able to develop local talent in Myanmar, and if I look at you know, Cambodia, for example, I had 3 exceptional female leaders who were in their 20s when I first started Wing around 2007. One ended up becoming a CFO of a bank, and then ended up becoming the first CFO of Wave as a Cambodian expat. One became the first country manager for Visa in Cambodia, and one became the first female CEO of an MFI in Cambodia. So I think there are fantastic opportunities. And one of the most rewarding things I've actually found in my career in Southeast Asia and the Middle East has actually been the development and seeing you know, people from these countries actually rise to great heights.
So I'm just going to run through some of the poll responses because I think they're quite interesting. We asked the attendees where they thought, which region they thought had the lead in digital financial services at the moment, and it's come down a dead heat between Africa and Asia. Not a lot of interest in kind of Europe, North America, or South America. How do you read that, Justin? I can see you nodding. You think they're on the right track?
Yeah, of course. I mean, I think some of the greatest innovation has come out of Asia, particularly Southeast Asia, and Africa, particularly Kenya, you know, Uganda, Tanzania. What and we're all benefiting from it. But I mean, hopefully, and we've seen millions and even billions of people benefit from this. So I think, yeah, the audience is spot on.
Okay. And Brad, we asked them who they thought should be the main driver of financial inclusion, whether that's private industry, charity, the underbanked communities themselves, or governments. And governments came back a nearly 2-to-1 winner. So I know you talked about the involvement of some of the donor communities, some of the NGOs. That was something we didn't really touch on, was kind of government support. And I suppose it comes down a little bit to regulation. But do you see governments actively going out of their way to increasing financial inclusion in countries, and other particular countries that you would say are the gold standard for that?
Absolutely. I mean, there has to be an enabling environment for financial inclusion, you know, as the first step. I had the great pleasure twice to meet Queen Maxima, who of the Netherlands, who's actually the UN Special Ambassador or Special Envoy for Financial Inclusion. And you know, she literally came to Myanmar to basically meet with the government and actually to talk about financial inclusion and the importance of financial inclusion in the development of their economy. And to me, you know, that was such a powerful moment, because you've got someone who really, you know, could live a pretty comfortable life as a royal, who's basically, you know, she's an ex-investment banker, and she's putting her time into where she sees you know, she can make an impact, which was, you know, I very much enjoyed getting the opportunity to meet her and listen to her views on financial inclusion. But I think, you know, she travels around the world basically meeting governments and selling them the story about why financial inclusion matters. But I think, you know, I also think this is an area where we've actually had great progress. You know, I think, you know, if you look at, you know, it's not just the UN, but if you look at organizations like IFC, like CGAP, you know, they have put, like the World Bank, they have gone into these countries and written regulations for them to create the environment to actually allow this to happen. So I would say most organizations get it now. In fact, you know, when we first went to Cambodia in 2007 to talk to the central bank there, M-Pesa had only just launched. And so really, and I actually said this to the Deputy Governor of the National Bank who was there when we did this. And I actually said to her a couple of years ago at the Singapore Fintech Festival, you should be very proud that the Cambodian regulator took a chance on us building out a mobile money platform, because really it was such an early stage of the development. And I think that their view was, well, let's give it a go. If we don't give it a go, we're not going to be helping the poor people, and it's our role to lift everybody in the organization, lift everybody in the country. So I think there's great examples of where governments, donor organizations, and so on have done good. And I think, I would agree. If it starts with government, once government puts the enabling environment in place, then the private sector can come in and do what they need to do. I don't think government should run these schemes. I don't put it that way. I don't think government should own the schemes.
Right.
I think governments should just create the enabling regulatory environment.
Why is that out of interest? Is that a data concern? Is it an ethical concern? Is it to do with the efficiency of public versus private sector?
I think it's more the efficiency. I think really, the reason why these have been so successful is they've generally come out of telecommunications companies, which have a for-profit motive, but are also, they've worked out how to provide services to the poor. If you can make money on an average revenue per user in a telco of $2 per month, then you can make money through financial services. That was the sort of the philosophy that took telcos into financial services. And I think, that's obviously, it's not necessarily something that government would be able to replicate in most cases.
For sure. So we'll go to the Q&A now. And folks, if you're watching and you've got questions, please do continue to send them in. This question, Brad, is for you. Somebody asks, we talked about unbanked and underbanked communities. At what point does somebody become banked? What's the definition? Where do they have to be on the curve for us to consider them to be banked?
Yeah, it's a very good question. And I think, products need to be developed and designed for the needs of the particular consumer. I would argue that a lot of the poor don't need a bank account per se. They need somewhere they can safely store money digitally and not have to worry about it, about the physical cash. They probably need to be able to send money and do that efficiently and fairly cheaply. And they need to potentially access loans at a reasonable price. But you don't need a bank account to do those things. You can do those things with a digital wallet as well as you can do with a bank account. So, and I would actually consider those people banked. I think if they have a financial instrument that allows them to do those things, then I think then I would consider them that they're a bank consumer without necessarily being a bank customer.
And Justin, I can see you nodding there. It looks as though you agree with Brad's thoughts.
I was going to say exactly the same thing.
There we go. It's almost like you've worked together in the past. So the second question then comes in, and the question is, does crypto have a role to play in financial inclusion? And Justin, I'll come to you first, if I may.
It's a hairy one. Look, I think where crypto is today, perhaps not. I think where crypto is heading, absolutely. So one of the most powerful aspects of it is the ability to obviously have very trusted forms of ledgers. So cadastral registry is very important, asset ownership, and of course accessing financial instruments, but being able to subdivide them. So a tokenized asset may be subdivided many times. You don't have to buy one whole share of Amazon for several $1,000s. You can break it up. So it is a way, if you tokenize assets on blockchain, I will separate from crypto, that you are able to open up more finite investment instruments and do it at relatively low cost. I think Bitcoin itself today is not suitable for payments. It's the network itself is only capable of 7 transactions a second globally, compared to say the Visa network, which can handle 70,000 transactions a second. So there are obviously significant benefits to centralized models, SWIFT being another. However, I do think that Lightning networks, newer forms of tokens, crypto coins are changing this. There's a number of very clever institutions now able to, for example, with DeFi, you can stake your crypto, you can lend against your crypto, you can transfer your crypto very rapidly by using these broker networks and Lightning networks. And so they're becoming more like a banking instrument than just a static asset. There are some negative aspects as well. Clearly, environmental impact is something of consideration around mining and electricity consumption. I think it's about 0.6% of the world's electricity consumption today is just for mining Bitcoin. But I don't know, for example, the Facebook approach to tokens and everyone was going to get a token. It ignores a lot of the problems which you cannot get around in for example, international remittance, foreign exchange, different interest rates in different markets, inflation. So you have to be very careful. We have to be extremely sensitive to the bottom of the pyramid, that we're offering products which make sense, carry minimal risk, because wealth preservation is the number one name of the game.
Yeah. What do you think, Brad? Would you agree with that? Do you see a role for crypto?
Yeah, I think Justin's given a very consolidated answer. Lots of very good facts in there. I would actually say the other thing I'd just add is gas fees really make it a poor payment instrument. The time of the transaction. I mean, I think one of the things about fintech is that it's very much into real-time payments. I think we were building real-time payments networks in Cambodia in 2007, where in Australia you're still waiting 2 to 3 days to receive money from bank account to bank account. Yeah. So I think obviously there's time there, but I think one of the things that really interests me in crypto is not so much crypto as Justin said, it's more the decentralized finance and the potential for that. So I think there will be a role to play in the future. I just think what that role is, and a lot of it will depend on regulators, because regulators are obviously very worried about how anonymous crypto is. But at the same time, I think they're also looking at the power of decentralized finance and what that can potentially bring. So yeah, so I find it a fascinating area, but I think today mainstream, I don't see it having a role to play, but big potential in the future, I think.
Yeah, you mentioned regulation there. Actually, our next question's come in, and the question is, how do you manage KYC and AML considerations among underbanked and unbanked communities? Brad, I'll pass to you if I may.
Look, a lot of it's really driven by the particular market. If I go to the Middle East, Pakistan, for an example, or close to the Middle East, Pakistan actually have quite a sophisticated national identity system that's run through an organization called NADRA, which is owned by the government. And what that means is that every single transfer that I do, there is a lookup that goes to NADRA to basically make sure that the KYC of the person I'm sending money to is known in that database and isn't going to contribute to money laundering or funding of terrorism and so on. So I think you have a very sophisticated solution in a developing market that is playing a key role in compliance and so on. If I look at a market like Myanmar, national identity cards are written on a bit of paper and laminated, and then your identity card was given to you. Let's say you're 40, your national identity card may have been issued to you when you were 18. So the photograph on your ID card is over 20 years old. So, and it's also not even a number, it's a mixture of numbers, symbols and letters. So to be able to take that and put that into any sort of database is complex as well. And you can have the same numbers. So, Justin's number may be the same number as my number if we're born in the same township and so on. So I think it makes compliance, well, you still have to comply, and you've got to use that as the basis of your national, the identity system that you use for KYC and so on. But I think it would be a lot easier sometimes to work in markets like Pakistan, which have that sophisticated national identity system.
For sure. Justin, I know the UAE takes KYC and AML very seriously indeed. How are you, solving some of those problems with Zand without getting into the, the...
No. I mean, it's relatively public information, so I can get into it. So, everyone we onboard to an account here has to have an Emirates ID. So you must have a valid residency here. So that ID has a chip on it, and like Brad described, this is a luxurious market in terms of KYC because it's linked to a central government database. From there, we run automated checks through a system called WellCheck, which checks OFAC, UN, UK, US, etc. watch list. It does sanction screenings. We can check, we can add additional blacklists if the local market requires it as well. The other thing that's, I guess, changing here is using OCR scanning, facial recognition, and APIs to a central government database. So I can present my Emirates ID to my phone. I can snap a photo of that. I then take a selfie. It goes through a pattern recognition system. It can read the text off the card. It can see my face, match it to my actual face, and you can digitally onboard there. I mean, if we're talking about small business, MSMEs that SANAD obviously works with, through their MFI and banking partners in the Middle East, they have additional requirements. So trade licenses, articles of association, and you have to KYC owners. You have to, if they're larger companies, if they have a board, you have to KYC board of directors. So in the small to medium business sole trader, it's not much different, but obviously there's more documents to scan. And what we're seeing is sort of not quite AI, but it's a machine learning where you can train the system where to look on the document to extract various information. And this really cuts your onboarding cost and makes it far more efficient. So we're using a lot of these technologies in order to onboard rapidly in the retail and corporate space.
Fantastic. Well, gentlemen, look, I appreciate your time. I'm afraid we've run out of time for more of your questions. We do have a few left over, which I will send to the panelists, and I will try and get those answers to you if you've submitted them. So thank you very much. Thanks for joining us. We've got another webinar coming up March the 23rd, where we'll be talking about new models of financial technology and talking to 3 fantastic panelists there. As I said, if you want to catch up on any of our previous webinars, you can do so by going to sanad.lu/entrepreneurship-academy. And you'll also find the recording of this webinar up there in the next few days as well. Thank you all very much for joining us, and we look forward to seeing you next time.